My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. When you get a red-hot employment number right after Fed Chief Jay Powell says it might be time to get less aggressive with rate hikes, well, you might expect a brutal sell-off as traders get swept away by total confusion. But that didn't happen. Sure, we did. We went lower at the opening, but then we came roaring back. Dow ultimately finishing up 35 points. S&P declined 0.12%, NASDAQ dipped 0.18%, but it was a huge comeback from the lows. Today felt like one of those upon further review situations like in football, where we initially sold off hard, then bounced back as we looked at the instant replay on the slow-motion cameras. The quick verdict of sell everything not nailed down was reversed, and the bull team kept the ball. Could it really be that easy? Yeah, sometimes it really is that easy. Lately, we've been in good news is bad news mode. A good employment report is bad for the stock market because it means the Fed has beat us mercilessly and must continue to do so with higher interest rates. But Jay Powell spoke earlier this week, and he told us things are on track, basically. So the market took these hot job numbers more or less in stride.
All aboard!
At least with the exception of the bedraggled tech sector, which I continue to tell you is troubling. What could derail a somewhat rosy picture? How about a real spike in inflation? Which, look, we could get one just this very weekend when the OPEC Plus members meet. Now, there's a good chance they'll decide to cut back on oil production, which could push the price of crude up dramatically. Oh, that's a great place to start our game plan for next week, because on Monday, we'll have to deal with the consequences of this meeting. I believe it'll be benign. You see, if the cartel raises output, they'll make less money per barrel, negative for them. But if they lower output, it benefits Russia, something that our government would be none too happy about. Keeping it status quo, that's the Goldilocks solution. If OPEC Plus does cut production, I think Biden should get a lot tougher on the Saudis, not just on the American oil men and women. Tuesday, AutoZone reports. All right, this is one that you might be familiar with. They have a lot of stores. I expect another great number. Why? Well, they've given us great numbers for more than a decade, and because people go there for car parts when they need to keep their 13-year-old clunkers running. I have a 13-year-old clunker. That's why I picked that. Rather than paying an exorbitant price for a new car, AutoZone keeps buying back stock. It's been one of my favorites for years. I still like it, even up here. We also hear from Signet Jewelers, and this stock tends to do the opposite of AutoZone on the day it reports, at least. Signet typically trades down sharply, only to rally over the next few weeks as people realize, wait a second, this thing's way too cheap. After the close, we get results from Toll Brothers, the home builder. I think it is worth mentioning that Bob Toll, the brilliant philanthropic Philadelphian who ran the company for so long, passed away in October. He was a great guy who appeared many times on our show and was incredibly prescient about the housing crash that got rolling in 2007, leading to the Great Recession. Yet this terrific man, always with a smile, saw it all coming. Other than that awful period, Toll Brothers consistently does well, even in a higher interest rate environment like we have now. That said, the stocks had a bit of a run going in the quarter. The textbooks say don't buy housing stocks going into a tightening cycle that could lead to a recession. I still think that's correct, but Toll could get interesting if the Fed ends up raising rates less than Wall Street anticipating. Next, anything connected to enterprise software has been devastated in this market. You know that. That's what I've been telling you. Avoid, 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 avoid. Well, when is it finally going to end? Will it run its course sometime? You know what we ought to do? We ought to listen to a company, or at least I'll do it for you, called MongoDB, all right? Yeah, one way to listen. It's another one of these gazillion database situations, and I'll suss it out for you. Then there's another I'll talk about having a gazillion of cybersecurity company, another sector that's been beaten up and seems to know no bottom, with the exception of Palo Alto Networks, the best of breed, and that's SentinelOne, letter S, which has been a real dog, down 70% year to date. Where are the stops? Well, I don't know. Nobody knows. Wednesday, we get results from 3 companies that fit the slowdown thesis. That's why they're all probably going to work. Campbell Soup, Ollie's Bargain Outlet, and Brown-Forman, the maker of Jack Daniels. Liquor does very well in a recession, particularly beer, by the way. That's a different story. That's Constellation, which the Charitable Trust owns, STZ. Now, we know Campbell Soup has been reinvented by its terrific CEO, Mark Klaus, and Ollie's is a fantastic bargain hunting store. They've all done well. The only one of those that didn't was Dollar General. They had some bad execution. Now, I am a proud soldier in Ollie's Army, their loyalty program. I bet they have a standout quarter. My Ollie's is always packed. After the close Wednesday, GameStop reports, and we find out what will become of this former battleground. Now, the company keeps losing fortunes. Does anyone care? I wonder if that will matter to the rabid investor base. They don't seem to mind anything. Hey, maybe they'll put Sam Bankman-Fried on the board of directors now that he's freed from his arduous regular duties at FTX. Okay, my sarcastic way of saying there's nothing here. Also on Wednesday, Lowe's holds an analyst meeting. I want to hear the marvelous Marvin Ellison, what he has to say. The stocks of the suppliers into Lowe's have been knocked around of late as the Fed tightens and mortgage rates go higher. I want to know what Ellison thinks. He's a realist. Fortunately, by his own admission, he has more work to do improving his own stores, but I think he'll give us an honest appraisal of what the rate hikes mean to his customers. I wonder if we'll talk about stealing. That's been coming up more and more again. They call it shrinkage. Nice way to put it. All right, on Thursday, we hear from the cheapest semiconductor company that isn't really much of a semiconductor company anymore, and that's called Broadcom, symbol AVGO. Ever since its massive acquisition of VMware back in May, I consider Broadcom a cloud king. Hock Tan, the incredibly disciplined CEO, rarely disappoints. While the cloud growth seems to be slowing, I bet he can pull an earnings rabbit out of a hat. Costco reports Thursday, too. This is interesting for me. We actually sold some for the Charitable Trust for a very big gain this week, telling CNBC Investing Club members that the comparisons are getting tougher. We only sold some, especially because gasoline has come down. I think the quarter will be fine, but if you own Costco now, you're banking on a special dividend or an increase in the membership fee. The latter seems unlikely, given that the most recent monthly data did show a clear deceleration. And that was worrisome to me. There are better stocks at this very moment for bargains. My favorite for the Charitable Trust is TJX. We did an off-the-charts feature this week on Lululemon, which comes out Thursday. I think we'll be pleasantly surprised, if not downright ecstatic about the quarter. Lulu's expanding rapidly with fabulous gross margins, and I like how its mirror division is doing. While it's expensive, I bet it'll crush the numbers. I predict what will happen is the stock will run up like heap to here on the day it reports, and people say, well, what an idiot Cramer is. Well, whatever they say. You think I really care at this point? I mean, if my mother called me idiot, now that would be a shocker. Now, on the other hand, two straggling reports, Chewy and DocuSign. I don't know about these. These are so-called COVID beneficiaries. They've spent enough time in purgatory. I really do believe that. To the point where maybe they can finally be sprung. I think Chewy's got a chance of an actual upside surprise. You know, it's a pet food company. But if it runs up in the quarter again, like I'm worried about Lulu, then be careful. The market pretty much shrugged off this morning's strong employment number. But if we get an overheated producer price index number on Friday, well, that may be too much for Wall Street to handle. I bet it does come in cooler, though, and stocks go higher. At the same time, we get the latest University of Michigan Consumer Sentiment Index reading. Right about now, we need a boost, a big boost, if only to save Christmas for retail, where most of the money's made for retail, right in just a 6-7 week period. I'm not worried about consumer sentiment coming in too hot, only that it might be too cold. Bottom line, as the year winds down, the holidays will become more and more of a focus. Right now, the forecast is cloudy, too many cross currents. But if the job market stays strong and inflation stays tame, we could be in for still one more very good week. Let's go to John in Maryland. John.
Booyah, Jim. How are you doing
John.
today?
I am having a good day. How about you, partner?
Great. I watch your show every day, Jim, and I watch it to learn. I call it
That's
my
what we're
homework
about,
with Jimmy
man.
Chill.
That's what we're about. Thank you. Thank you.
I pick my stocks that I believe have a good bottom line, good growth potential. So, Jim, what is your outlook for symbol CMI Cummings?
My outlook for CMI is the same as it's been probably since we first met them when we went to Indiana, and this is a great Columbus company. I think it's fantastic. I think you own it for the long term. It's in a real flying mode right now, as there are many of the industrials. I like the stock. But, those who are just new to it, maybe wait for it to come in. It has been on fuego. Let's go to Charles in Florida. Charles.
Happy holidays, Jim. Booyah.
Same to you, Charles. Booyah. What's up?
Hey, thank you for taking my call and for all your hard work in the market. When you mentioned United and Delta Airlines, I really ran with it. I also got into cruise lines like Royal Caribbean. And with the travel industry taking off and sailing away, why isn't Uber driving up and away?
You know what? I actually think that you might. They have a lot of competition. Remember, they're also moving. They're in food. They're up against DoorDash. You kind of want Lyft to go away. But you know what? I'm with you. I think that Uber's a buy. I debated with Jeff Marks to even put it in the bullpen for the Travel Trust because I think that they announced the pivot toward profitability a long time ago, and they're going to do it. And Cosmosari is a genius. So I do think that Uber, you're going to be right with. All right, now, if the job market stays strong and inflation stays